Hi there, and welcome back to your Daily Market Podcast. I am your host, MaryKlaire Pelk. I'm the Director of Operations for the GCU Finance and Econ Club. I'm here with Charlie Hurst and our guest, Phillip Mast. Why don't you guys go ahead and give us a quick introduction?
Yeah, I'm Charlie Hurst. I'm also the Director of Operations, and I'm a freshman here at GCU.
I'm Phillip. I'm also a freshman here at GCU, and I work in the relationship management part of the Finance and Econ Club.
Awesome. Thanks, you guys. As per usual, we're going to be going over some numbers for today, as well as talk about the biggest money mistakes that college students tend to make. So taking a look at the numbers, looks like we were in the green today. The S&P was up 0.72%, the Dow was up 0.48%, NASDAQ was up 1.16%, and oil prices were down 1.13%. So it seems like we're moving in a positive direction, at least today and yesterday, which kind of brings me to our first question of this segment, which is, do we think that this move is real momentum heading towards a positive direction for our economy, or is it just a quick, brief relief that we're seeing?
Yeah, so I know we've talked about like a correction a couple times, and the NASDAQ was down that 10 to 20% range that we've talked about. And now it's up over 5% in the past 2 days. So it got into that correction territory and it started to bounce back. I think this is more of a short-term bounce just because this war with Iran hasn't been going on for too long. It's been about a month time frame. So it's not enough to move the markets in a 1 to 5 year time frame, but in a 1 to 6 month time frame, it definitely is moving the markets.
Yeah, absolutely. I totally agree with that. Seems really that, the energy sector has taken a hit due to the fact that for the first time in a long time, oil is under 100 gallons a barrel, $100 a gallon. I think that's a big factor here.
Yeah, definitely. So we talk about all of these factors influencing the economy, mostly in the global picture, which brings us into a discussion of the de-escalation that's currently happening with the war in the Middle East. How is that going on? How is that affecting our market that you guys are seeing?
Yeah, so it's providing a short-term relief for investors. Obviously, when President Trump announced that he's trying to de-escalate the war, we see a almost 4% bounce in the NASDAQ yesterday, and I think it was about 2.5% bounce in the S&P. So obviously, what he's saying has a huge impact on the markets, whether he's de-escalating it or not, or telling the truth or not. Sorry, it's making a big, very short-term impact.
Mm-hmm.
Yeah, absolutely. I think that the fact that Trump tonight is going to be talking about his specific plan a 2 and 3 week plan to really de-escalate that conflict is huge. Specifically, the fact that Iran is controlling the Strait of Hormuz right now is massive for oil. It's usually there's hundreds of gallons and thousands of gallons coming through, and right now it's just about nothing.
Yeah, and to touch on that as well, obviously we have like these markets, and when they're bouncing in the short time frame, it's very volatile. It's a good time to stay away from the markets in general and just watch. It's very fun to watch when you see these indexes up so much in a single day and then following and continuing that rally. It's just fun to watch that, and I think that's probably the better thing to do right now if you're an investor.
Yeah, definitely. I know we've talked about this before, but one interesting thing to watch is the VIX. I know we've talked about that a bit before. Do you want to explain what that is?
Yeah, so the VIX is a volatility index, and typically it does the opposite of what all the other major indexes are doing. And in a short time frame, say like yesterday, the NASDAQ and the S&P were up a significant amount. The VIX should have been down. I don't know how much it was down yesterday, but it usually does the opposite of what those are doing. So if we're in a bear market, then the VIX is typically doing really well, as it's almost at $24.
Yeah,
Right,
looks like we were down 2.81% today on that, which is a good thing. Another major event happening today is that we had a rocket launch. Do you want to talk about that and how that might affect things?
Yeah, I think it's super cool to see something like that in our lifetime at such a young age.
Mm-hmm.
And this is going to be the longest space trip ever in history. So this is something that we can look back on in 20 years when we're adults and tell our kids about. I think it's really cool. And I think it does make an impact on that sector in general. Obviously, there's been talks about SpaceX maybe going public and having an IPO over the next couple of years. And I think that makes a big impact for that market because now there might be more space expeditions in the future.
Yeah.
And that brings in a lot of investors that want to get into this new type of world.
Yeah, so you mentioned going public. What does that mean for someone who might not understand?
Yeah, so when a company has to be publicly traded to be on the stock market, and before that they are not a publicly traded company. Yeah, there's shareholders in the company, but it's not traded to the general public of the United States and other countries as well.
Yeah. So moving into our topic for today is the biggest money mistakes that college students make. So opening up the floor, what do you guys think the most common mistake that college students make when dealing with their finances?
I think for me, I think it's kind of an overlooked one, but college students, have this idea that we are broke, and in a lot of ways we are, and I think that stops people from wanting to put money in the market due to the fact that they're waiting for that salary to hit, waiting for the money to hit so they can finally put something in, when in reality, like putting in what you have now and what you can spare now and letting that compound is much bigger than, say, waiting until you have, a little bit more and then putting in one high dollar amount.
We do talk about compounding a lot on this podcast. Do you want to explain what that means and the impact of that?
Yeah, absolutely. So if I am, for example, I'm gonna try and put in $50 a month now versus $2,500 after a lot more months, that $50 has been working the whole time, and that $2,500 it just isn't.
And the main thing to touch on compound interest as well is, I think we talked about this yesterday, but when you put that $50 in, the first month it's only going to be $50. Then the next month you're going to have, say, $55 invested. So now you're going to be making more money off of that initial investment. And I think to talk about like something that college students make a mistake on is not taking risks. We're young. We're all of us are 18, 19-year-olds. So you're young. You can afford to take mistakes. None of us have real jobs that we're going to be working for the rest of our lives yet. So just don't be afraid to take any risks.
Yeah, most of us have a safety net that we can fall back on. So we definitely have plenty of time to recover should things go wrong.
Absolutely.
What are some common mistakes that kids make with credit cards and with things like that you guys see?
I think a lot of people try and for the first time they get a credit card is they really treat it like it's a debit card and just spend it on anything and everything they can. And then when you don't see that money leaving your balance, sometimes it's a lot easier to make those bigger purchases and just even to make the smaller purchases that just add up versus, when you're using cash, using a debit card, you're seeing the money go out of your account. So I think that's a big mental aspect of it.
Yeah, definitely. We did an episode on this a few days ago about credit cards and how they work, but do you want to maybe give a quick overview of that for anybody who may not fully understand?
Yeah, so the difference between a credit card and a debit card is that a debit is you're paying with your cash from your checkings account or whatever type of account you have. So it's coming straight from the account. If you're paying with credit, then you're paying with money from the bank that the bank is lending you, and then you pay it back at the end of the month.
And that can definitely be risky if you're not sure if you're living above your means, which brings me into our next question is, how much damage does living above your means do for someone at our age?
I think it really affects, you in the future and how much assets you're going to have in the future, especially when you're like putting money into depreciating assets like nice clothes or cars, something like that, versus taking that money and putting it in the market or something like that. But yeah, living beyond your means can definitely make you a lot more stressed as you go on in life too. I know for like me, like, when I first got to college, it's a lot easier, like within your first semester to really like overspend based on what like you set your yearly budget for. And then at the tail end, you're just kind of like really having to use those like last dining dollars.
Always comes back to the dining dollars.
Yeah, and one thing to touch on too is if you're overspending with a credit card, like you're talking about, that can be very risky because if you don't pay back at the end of the month, then the next month you're going to owe more than how much you actually spent. And then that puts you in a hole for however long you don't pay it back.
Yeah, definitely. We talk about compounding interest a lot on this show as our friend when it comes to investing and things like that. But when it comes to credit cards and your debt is the thing that's compounding, then that is definitely going to send you deeper than your investments will.
Yeah.
So if someone feels behind financially, maybe they have racked up a little bit of debt, maybe they have student loans or something like that, what should they focus on first? What are some moves that they can make to help mitigate that?
I'd say saving. Obviously, if you have a job, you should definitely, if you have debt and a job, then you should definitely be putting a lot of that money that you're making from your paycheck towards paying off your debt, so that it doesn't get in a worse situation in the future. I think that's probably the most important thing.
Yeah, definitely.
I think too, just like you said, living beyond your means and realizing that at least for this time, like if you have a lot of debt and stuff like that, you really do have to like live broke, like in a lot of ways, and like really like bring down your spending, like buying new clothes instead of going to Gucci, you go like I don't know, somewhere else. Like that's just really like something you have to hone in on and really like start shaving away at like the little things, because then they just add up over time.
Yeah, doubling back to what Charlie said, we don't have too many real things right now that we have to spend our money on, like a mortgage or a family or anything like that. So there shouldn't be too much of a reason for college kids to not be able to save their money, especially if you have a job. So
I think the one thing to touch on though is that a lot of college students are paying for their own college. So if they're taking student loans, then that can be something that you really need to pay back as soon as you get out of college, once you get your first job. A lot of people fall into a hole after college because they don't pay back their student loans quick enough. And it turns into, like, for example, when I watch Dave Ramsey, there's people that call in that they have $675,000 in student loans because it's compounded over a certain amount of time and they just haven't been able to pay it back. So it really sets you back years and years and years. So if you're taking student loans, definitely be sure to pay them back.
Yeah, education on top of education on top of education is so important when it comes to finance and taking loans out and all of that sort of things. Because if you don't know what you're doing, especially when you take that out a loan, then it could definitely come back for you later.
Yeah.
Yeah, I think just like you said with the Dave Ramsey thing, like I know that he has his 10-step program, and I think step 1 or 2 is just getting rid of all your debt, and especially minimizing credit card debt is massive.
Yeah. Any other tips that you've picked up maybe from him or from your personal way that you spend your money or save your money, anything like that?
I think for me, something that I struggled with a little bit at the beginning of the year is like online shopping, and like the fact that it's so much easier to like, I think this might apply to Charlie a little bit too, but like going on, like for me it was like going on eBay and buying sports cards is really easy and really like instantaneous thing, versus if I were to take that and just try and like physically spend my money versus just like clicking buttons, because it really it's a huge difference in your brain when you're using something like, even when you're using something like Apple Pay versus taking out a debit card versus taking out cash out of your wallet, is all just a huge mental trick.
Yeah, to touch on that as well, obviously you should be spending your money towards something that you enjoy, but there's like a balance that you need to have.
Yeah.
Maybe you set some aside to feed that habit that you have.
Yeah.
And then the rest goes into savings, obviously. But I think you definitely have to be able to spend your money on stuff that you enjoy, or else you're gonna get bored. But I think
that's a good point.
I think that's really important.
Yeah. Not everything, every single penny that you make has to go straight into savings, straight into your future. While it's good to set those things up, you can also have a little bit of wiggle room for the things that you enjoy.
Yeah.
Anything else you'd guys like to add before we wrap things up?
Sure.
All right. Well, thank you for tuning in to your Daily Market podcast. I hope that you had something to take away from today.